All right, there we go. Uh, Hello, welcome. My name is Ismail. I am an account manager here in IQ Option. And today, what we're studying is trading with candlestick patterns, part two. We did already part one a couple of weeks ago. We will be doing a small recap on the first part, and then we will focus on new patterns that might help you. As always, you know that trading involves a certain level of risk that we must be aware of. There you have the disclaimer. You want to read it. And also, you will be having a recording of this video. If you have registered with your IQ option mail, you will be receiving a mail in a recording on the next days. Also, the chat. I see some people there already. Edviga, Nesha, Zoran. Hello, hello, hello. Me, the moderators, will be checking and answering, of course, all your queries, suggestion, comments. Please feel free. We are a family here in these webinars. We already know mostly each other. So please feel free. It's a pleasure always to read you. Let's start. Let's go. So what we learned on part one, a recap. So how to identify hammer, shooting star, doji, and head and shoulders. We will be doing examples on this also on the live. Hammer, shooting star, doji, head and shoulders, very common, very famous. I'm sure you know some of them already. An example, let's go. So here it's 15 minutes. What we can see, we see at the beginning a shooting star. What is a shooting star? I'm coming in an uptrend. Then suddenly I see these candles. I could be on alert, waiting for the next one to confirm if a reversal is starting. No, this is a shooting star, the large wick at the very end of a trend. That might mean that a reversal can happen. Hammers. Here they are. You see reversal hammer, you see normal hammers. Okay, hammers are also reversal points. We can also even call this the shooting star a reversal hammer if we want to. It's just a way to mention it clearer because it's at the very end of a trend. Hammers. And then we have the doji. Doji, remember that it's the green candle. It's this one. And means indecision. Normally, we should wait for the next candle to confirm the direction. Doji. A few more hammers here. Few more hammer. Upward. Upward. Okay. We'll double check also this on the live. Head and shoulder. Very nice one. Very nice pattern. What we have here a first shoulder, then the price goes up again, beating the previous high, meaning I'm making a head here, coming back to the very support same price, also called neckline. Then the price starts to go up. Here I can be on alert. I can say, hey, be careful because a head and shoulders might be starting to create. If the price again rebound back, I have a head and shoulder that can be activated if we break the neckline. The moment that the critical moment will be, I guess you can see what I'm painting. So if we break this price, the head and shoulder will be activated. And then I might expect a downward trend. Remember that a head and shoulder also can be reversal. This same head and shoulder can be upside down, meaning that if it breaks the neckline, will be uptrend instead of down, right? So you see how it crosses the neckline and then goes all the way down. If you want to see how long could go down, we can measure the distance between the neckline and the head and project that distance as a potential target. About today, well, today we have prepared these four: bullish engulfing, is this one; bearish engulfing, the opposite; evening star; and morning star. Okay, these four also very popular and very useful, very widely used in trading. Bullish engulfing. What do we need? Here is the description. A red, when a red candlestick is followed by a large green candlestick, which the body of the green completely overlaps or engulfs the body of the previous candlestick. We can see how the body, it has a lower minimum and a higher maximum, meaning that I might wait for the next candle to confirm ahead of this high of the week, and then potentially trading up, okay, according to this bullish engulfing theory. Okay, an example, we can see an example in Tesla one day. So downward trend. What we see the bullish engulfing candle. There is it. Sorry, one moment. Yes, going up, the bullish downtrend, and here it is. No, let me draw it again. I have this body, and I have the next green candle completely covering the previous body, indicating what? A potential, eventually upward trend. The opposite, I bearish engulfing. A bearish engulfing, I start in a red candle, then the next one is red and completely overlaps the previous body. Then I can wait for the next candle to confirm if I want to, and then expecting the price to go lower according to this theory. An example, let's see an example in oil. We have an upward trend going up. This is 1 day candle, so it's been going up 1 day, 2 days, 3 days. The fourth day, red candle. How red it is? It's very red. It's big one, and it covers fully the green candle. We can see. Then, at what point should I start? Well, according to the theory of the engulfing, I want to break this price. Do I have to wait till this candle closes? Because it closes here, it doesn't beat this price. The next one also doesn't. Yes, this one. Should I wait till here and then open down? I can if I want to wait for the candle to close. If I'm there on price action, I can trade live. I mean, if when this candle is happening and the price is reaching here, even though it hasn't closed, but since we have beaten this price, I might start my short here, expecting this direction to happen. No? How can I protect myself? I can place a stop loss at the very end the candle. No, here will be my stop loss. As you can see, example, the trend reverses. Let's go for an evening star. This is also, it's telling us reversal points. When the trade is going up and suddenly we have an evening star, means that the opposite can happen and start to go down. Okay, you can see in this example, it consists of 3 candles. I want the first green, then a red, small, and then a big red. You might notice here there is a gap, right? Gaps happen normally in stock market. It doesn't mean that I can only trade evening star and morning star in stock markets. I can trade it in Forex as well, in commodities, skipping this gap. We will see some examples of how an evening star can happen with a gap or without a gap. We might have this red candle here, which is at the same as the other two, and still we can consider an evening star and trade it in that way. Let's see an example of an evening star. Oil going up. We see these three candles formation. You see that there is no gap in this example. And then what happens? Then I have the trade going down. Very interesting because at this point I have uptrend, my green, small red, big red. Then I have a doji. What the doji tells me indecision and tells me, hey, wait for the next candle. Wait because there is a battle between the buyers and the sellers, and we don't know who is winning this battle. If I can say it this way, no. So let's wait. Let's wait who will win this fight, and you see that the next one gives us a beautiful red. That might indicate that the trend is going down. Stop loss above the evening star. Here, my stop loss. Another one there, second example, very similar. Green, red, and then red. And the price going down. Morning star now, which is the opposite, very similar. What we have is first a red. This should be the price coming on a downtrend, gives us this red. Then a small green, like a stop out, like it's like the market telling us we might have reached a dip, and we wait. If the next candle hits green, then we have this morning star formation, expecting the price to potentially go up. An example, oil here, 5 minutes, and we see what happens. No, we see how the price going down, going down, going down, down, and suddenly very beautiful example because here what I have is a hammer as a start. No, not the body is not in the middle, which will be still valid, but since it's a hammer and the hammer normally what is telling you at the very end of a trend is that a reversal might happen, then very interesting. No, then I have this green, which is confirming not only the hammer but the morning star, no, indicating the price going up. See another example here, red, small green, followed by a big green, indicating price to go up. In both cases, my stop loss would have worked beautifully because here is where my stop loss is, here is where my stop loss is. Although it's go down, it never reaches my stop loss, allowing me to close the position either here or here or here. Let's go live and see some examples on the live account. Okay, we can go start by euro dollar. I was checking euro dollar. We are in 5 minutes. Let's see one day. In one day, if we can see some engulfing, perhaps. See this example here. See this green and how the next body eats completely the previous green, no? So this is a bearish engulfing. What indicates this? When do I open my trade? This is the question. Do I open my trade here? It always depends on you. There is no theory or method that works 100% of times. It always depends on you. I am more aggressive. I think here, I don't need more information. It's enough. Euro will start to collapse. Open your trade here. Go short here. Do I want to wait for a confirmation? I wait for the next candle. I wait for the next candle. If the next candle is this, then I open my trade here when it closes. Then I have all of this. Up to you. According to the theory, let me zoom in so you can see better. You see this wick? There is a wick there. the confirmation can be going below the wick. So if I see on price action that even though the candle didn't close, it's still there, but I see that we have reached this price, which is already below the wick, I can also open the short trade there. Okay, I can also open the short trade there, and my stop loss is here. Here is my stop loss to protect the position. Let's go 5 minutes. We see something now that is happening currently. Okay. What we have, yeah, we have a star. Okay, what do you think? This could be an evening star or not? I don't like this hammer. If you ask me, yes, it looks like an evening star, but this hammer, I don't like it. What about this one? Better, right? According to what we have seen in the theory, this looks like a beautiful evening star. See my green, see my indecision and red, and see the next red one, and see what happened next. My stop loss here never triggered. Beautiful. This one, this hammer, because the body, if we had the body here, but what is the theory of the hammer? Hammer is supposed to go up. So I will be hesitant there. Let's see if we see another example. Yeah, this one could be as well. Check this one. Green, red, although we have a extremely large wicks on both sides, but it's fine, right? Because the star, we focus about the body, although I don't like it so much because of the wicks so big on the extremes. But in this example would have worked. In this example would have worked. Would I have opened a trade? I don't know, because of these wicks. But yeah, green, small body, and then red, big red, no? And see what happened next. All this trend going down. So also an example there. We are in 5 minutes, we are in today. So you see that these are patterns that happen often. This is what we want to teach you guys. Something that you can work on a daily basis. Okay, nice. What can we see here? Now let's be, this is from the recap. This is from the first part one that we mentioned today as well. This is beautiful, what I have here. Let's see if we can draw it better. Second. Okay. Okay. We have this. We have this. And then we have this. The price goes up. So it didn't finish. It was almost about to make, if we don't have this, okay, we have almost a head and shoulder. And here is the neckline. If we cross this level, we might expect the price to go down. So a head and shoulder here, but at this point it went up. If we had my second shoulder, then it will be interesting to see what would happen. I also draw in Berkshire, you probably know this company, Berkshire Hathaway. This is from Warren Buffett, one of them. and I was checking in 1 week because the price really collapsed recently. And we can create a head and shoulder here. Although this is 1 week, I know this is long term, but here is the picture. This is my neckline. This is my neckline. See what we have. Shoulder, head. Now let's say that the price rebounds up. Let's say the price goes up. Let's say the price goes up this level. Let's say then that again the market crash and we go here. What if I cross my neckline? What if I am here? I can project the distance from the head to the neck and potentially obtaining this. This is what I drew before. Let's draw the neckline and a horizontal line in white. Okay. And I think you can see, right? This blue. Imagine the price follows the blue line. We create a second shoulder and then we break below it. Then this is my projection. And this is the distance from the neck to the head and potentially going to a price of under 200. Can happen. Yes, can happen. Of course. Another example, we can check. This one is from today. This is 30 minutes. I was checking this morning. We had here. Let's draw the lines missing. You will see it clearly. What we have, it's yes. And let me draw the head in white. You probably know already what is this formation. It's a head and shoulder reversed. Fighting here with the sticks. Okay, more or less you can see it there, no? So this happened today in oil. Today in oil we got this. We got. Let me change the color. I know. We have this first shoulder, this head, this second shoulder. See how the neckline works really well. See how once we break it, I have this. Let's measure. Let's measure if it worked following the strategy that we said, that we measure the distance from the head and projecting it. Almost. Almost, right? Almost. So also reversal, head and shoulder, as you can see. In this case, it really worked. It worked really well, no? It worked really well. What else we have? SP 500 also, there are beautiful examples here. Let's see, since we are now moving to stocks, moving to indices, and we know that they are not like commodities or Forex, that it's like almost the whole day, no? So we have no gaps. In indices, in stocks, the market opens, the market closes, so we will have gaps. And here I saved a couple of examples that are matching better the theory of a morning star, of an evening star, right? See this morning star, red, gap, green, small, then again gap. Let me erase this. Probably we can get rid them of. Well, okay, now it's clear. So first red, gap, green, gap again, and my second green is big and it has a gap, no? All of this is a gap. See what happens next. Next example, evening star in this case, the opposite, green, small gap, red, small body, and the next one, although we don't have here gap, but it still is fine. Red, big red, no? See what happens next. Stop loss not triggered. And here as well, my stop loss is not triggered, right? See this example, now very important, because here we have two. Are these evening star? This should be red, and this should be red, right? Should be green, red, red. And we have green, green, red. So it's not really what we are looking for. And this one also is a beautiful one. I'm in 1 day. So green, sorry, red, green, gap, and green. You see here. So what is this? It's a morning star and price heading up, right? So what is happening now in SP 500? See how much it went down. Let me recover these previous lines. So this is the current trend, no, that we have in 1 day in SP 500. The last highs here, no, at the beginning of the year. Price going down. Now a small rebound, a bounce back. Where it can reach, well, will be interesting to be careful with this price, no? This is the last area that worked very well as a support. So maybe we can see an attack to this line, which is also more or less the same area as here, and potentially going down, no? That could happen. Would be nice to keep an eye, because we know that America, Europe, China, Japan, you see what's been happening with the Japanese yen, right? The world apparently it's entering to a crisis, and for sure stock market will be affected. Commodities will be perhaps the last one to notice the crisis, but of course, after the GDP starts to go down, then it's time for commodities also to go down, because there is less demand for them, no? So let's think by today of a bearish market, no? Of a bearish market, trying to sell the rebounds and to buy the market when it falls, no? To be there. So guys, this is my take from today. Let me go full screen so I can see better. Let me know if you have some query, something you want to share. If not, well, this is what we learned today. Patterns can be useful, yes, of course. Getting to know the candles, it's better than working with one line in a chart, because also a candle gives you more information, the body, the wicks, the different patterns. So it's nice. It's basic, but not because it's basic doesn't mean that that it's not useful. Of course not. And yeah, best of luck with your trades, and see you in the next webinar. Thank you very much. It's been a pleasure, and have a nice day, nice evening, and nice weekend. Bye bye.